Hey everyone! Today I'm diving into the golden rules of accounting that will help you get a solid grasp on how to record transactions correctly. These rules are super important and pretty straightforward once you get the hang of them. Let's break them down. First up, the real account rule. The rule here is debit what comes in, credit what goes out. What does that mean? Well, real accounts are all about things you can touch or own, like cash, equipment, or buildings. So you debit or increase the account when you get new assets. For example, if you buy a new computer, you debit the equipment account because you're adding an asset. And you credit or decrease the account when you get rid of an asset. So if you sell that computer, you'd credit the equipment account. Simple, right? Bought new office furniture? Debit the furniture account. Sold an old piece? Credit the furniture account. Next, let's talk about the nominal account rule. The rule here is debit all expenses and losses, credit all incomes and gains. So, what's the deal with nominal accounts? They track things like expenses, losses, income, and gains, basically everything that affects your profit. You debit or increase an account for any expenses or losses, like when you pay for utilities. And you credit or increase an account for any income or gains, like when you earn interest on your savings. For example, paid for office supplies? Debit the supplies expense account. Got some interest income? Credit the interest income account. Finally, we have the personal account rule. The rule is debit the receiver, credit the giver. Personal accounts are for people or businesses you deal with, like customers or suppliers. You debit or increase the account of the person or business you're giving something to. So if you owe money to a supplier, you debit their account because they're receiving the payment. And you credit or increase the account of the person or business you're receiving something from. If you're paying off a creditor, you'd credit their account. For example, bought supplies on credit from a vendor, debit their account. Paid off your debt to a supplier, credit their account. I hope this clears things up. If you have any questions, drop them in the comments below. And don't forget to like, subscribe, and hit the notification bell for more accounting tips and tricks.